Hello, and welcome to the CLS Weekly Market Review. I'm Todd Clark. The market was truly up and down last week as prices swung between gains and losses each day. Domestic economic news was largely positive as U.S. retail sales, small business confidence, industrial production, and productivity all rose to their highest levels in several months. Global markets started the week strong. However, China's surprise currency devaluation on Tuesday dominated the headlines. For more on China and the potential impact of its actions, here are Scott Kuby and Grant Engelbart.
Thanks, Todd. So, Grant, the big news of this week, the Chinese devalued their currency. Kind of a surprising move, at least from my end. What were your thoughts about that?
Definitely a surprise. Tuesday morning, the Chinese currency has historically been very controlled by their government. It used to be pegged to the $1.94. Peg was removed in 2005. For a short period, it was pegged again during the financial crisis. And all through that time, they've been trying to liberalize it, allow it to float more. This was a move downward in the central parity point that they target in an effort to stimulate the economy, to stimulate exports into the country.
So cheaper currency helps the economy. That may not be really all that bad for Chinese stocks. Who loses out of this deal?
Excellent question. The neighboring countries that compete with China for labor and manufacturing are going to feel the impact. And we saw that last week. Malaysia, their currency, the ringgit, fell more than the yuan did to adjust.
You know, in the Korean market, I think, is another spot where you could see some weakness and possibly some further currency reduction, which is for currency hedging may make a lot more sense in Korea than it has in the past as well.
That's an excellent point. In kind of speaking of currency hedging or dollar-based EM assets, one area that we've seen had a lot of success with and have across our portfolios that investors often forget about is EM debt.
That's a good point.
A lot of EM debt is dollar denominated, and it's done well, attractive yields, and it's actually undervalued. One of the few places in fixed income where there is some value.
Now, one of the traditional spaces that people see when the dollar goes up is they like small caps because they earn money in dollars and get to purchase using a stronger dollar. But you had some negative thoughts about that area.
We have seen money flow into small caps because of that fact, but more impactful on the small cap space has been their ability to finance. The high yield space is where a lot of those companies go to get financing, and we've seen spreads in high yield bonds moving outward year to date, and that's really hurt small caps.
That's a great point. Great update. Thanks, and thanks for watching.